This is just in. The cost of living crisis continues, along with Dear Bank of England's habit to increase rates. And now to the weather. The Bank of England raised interest rates in March from 4% to 4.25%. That's a 0.25 percentage point increase, which marks the 11th rise since December 2021, when the bank rate stood at just 0.1%. It puts the bank's rate at the highest level since 2008 and has applied further upward pressure on the cost of borrowing. The next interest rate decision will be held on the 11th of May. Instability and doubts all around. After last September's disastrous mini budget, which caused the market a huge amount of uncertainty and caused costs to soar, mortgage rates have started leveling out somewhat and caused the British pound to drop at an all-time low because of that disastrous mini budget. Numerous lenders pulled packages from the market, some even at the last minute, including some of the high street names. Interest rates and their effects on mortgages. What impact have higher interest rates had so far on the price of mortgages? Following the most recent bank rate increase to 4.25%, the estimated 2 million homeowners on variable rate arrangements such as base rate trackers would almost immediately experience an increase in their monthly repayments. Let's say a £200,000 loan with a 25-year term would cost an extra £31 per month if the tracker rate increased from say 4.5% to 4.75%. For those with fixed rate arrangements where the interest rate is established for, let's say, 2 or 5 years, their monthly payments won't change. Mortgages will certainly be more expensive after the deal expires though, so bear that in mind. The likelihood of low inflation in the upcoming years means that borrowers may have to make even larger repayments when their loans are renewed. But homeowners who have been having trouble making their mortgage repayments may soon find some solace. Borrowers find themselves able to afford a larger loan than before because mortgage lenders are anticipated to offer lower interest rates on new offers. So watch this space. The following may have some positive effects on the future. Perks of being a first-time buyer. It's all sunshine and rainbows for first-time buyers going forward, which is a well-deserved break from the disaster of a year we've all been experiencing so far, right? For homeowners, conditions were very different from those for older borrowers who enjoyed historically low rates. 10% deposit products were taken off the market at the outset of the pandemic, but have progressively begun to be returned. There's a pattern here. These things come and go all the time, by the way. Nonetheless, there are significantly fewer 10% deposit options than the 779 pre-COVID products. The average rates for 2 and 5 year deals are now between anywhere from say 4.8% upwards respectively, following the 13 months of increases. In addition, first-time buyers can get rates as low as 3.09%, the lowest since 2011. This is all possible with a 5% deposit. Less rigid rules of affordability. It may be simpler to purchase a new home in 2023 due to the more relaxed and loosened affordability regulations. In August 2022, the Bank of England loosened, for want of a better expression, its standards for banks' abilities to pay. A borrower no longer needs to demonstrate their ability to pay an increase in interest rates of 3% to be approved for a mortgage. The banks rejected a different proposal to let lenders boost the number of substantial mortgages granted to those who can borrow more than 4.5 times their annual wage. Long-term fixes by borrowers. Due to the prior year, borrowers will fix for a lengthier period. Intriguingly and interestingly, more borrowers in 2022 took up mortgages with maturities that were longer than the average 25 years. Even though interest rates have been rising, the monthly payments are considerably lower, as you can imagine, because on a 40-year fixed-term plan with no exit costs, which was introduced by Habito in 2022, means that you've got more time to pay your mortgage. Therefore, obviously, the payments are less per month. Interest rates climbed in 2023 and the market was anticipated to change. The remortgaging boom may be incoming, by the way, following a decline in 2021 when the stats fell to 62 billion. There will be a surge in remortgaging in the UK going forward, I think. This contrasts with the 80 billion pre-COVID, so there's a big difference. These reduced numbers are partly due to consumers moving rather than refinancing their current mortgage. Due in part to the robust housing market between 2017 and 2020, our experts project an 11% increase, bringing the total amount financed to 69 billion. Also, debt interest rates may be rising, therefore homeowners may seek to refinance their home to consolidate all their other debts. Mortgages to go green. Mortgages will become more environmentally friendly as environmental issues remain in global reality. With more than 500 green mortgage solutions now accessible in 2023, the mortgage market has also moved. Many lenders have provided exclusive offers to property owners with energy efficient homes. These homes must typically have an energy performance certificate, an EPC, with A, B or C rating. There must be a minimum C rating for anybody in the buy-to-let sector. In 2023, it's anticipated more energy rated deals will be available. So if you're looking for a better mortgage deal, you might want to think about going green. When is it a good time to refinance? Due to the increased mortgage rates currently in the market, now might not be the best time to refinance. Those who purchased in the past few years won't need to refinance again because they might be on fixed rates for quite a while because they obviously refinanced not too long ago or purchased a property not too long ago. But it might be a better time for individuals who purchased property, let's say around 1981, when interest rates were at their greatest. Refinancing can result in reduced monthly payments, but because you're extending the term of the loan, it's possible that you won't always pay less overall. For guidance on refinancing, your best option obviously is to speak to a financial advisor or a mortgage broker, because I am not authorized to give you investment advice. That's all for now. See you next time, hopefully for good news on all things property.